and welcome to the Business Growth Show, where we talk about all components of business and how to utilize them for exponential growth. My name is Nathan Cassiotis. I'm a business growth expert who helps business owners grow and scale to create wealth and freedom. Today, I have an awesome guest. His name is Vangeli Kollias, and he's the director and finance broker of VK Financial, who assists clients with their first purchase of their first home, investment, car, or asset for their business. And VK Financial's mission is to ensure that their service and information is easily accessible, attainable, and relatable. And Vangeli is your finance teammate, guiding you every step of the way throughout your financial journey. And aside from being a teammate in the financial world, Vangeli is passionate about sports, ranging from supporting his beloved teams being the Brisbane Broncos, Philadelphia 76ers, and Arsenal. Welcome, Vangeli Kollias, and thank you for being on my show.
Thank you, Ethan. Thanks for the intro. Appreciate it.
You're welcome, mate. I'm sure it's going to be a great episode for everyone watching and listening today. So you're a successful entrepreneur. So for those people who don't know who you are, please introduce yourself by telling us more about you and your journey.
Yeah, so as Ethan said, Vangeli Kollias, VK Financial, run the business for about 5 months now, but I've been in a mortgage broker for the last 2.5 years. Prior to that, I've had some industry changes, being in sports management from when I first started all the way through to analytics, and decided I wanted to use my analytical math skills to combine that with my love of property and helping people. And that's sort of how the role of mortgage broker came up. So yeah, the last 2.5 years, it's been a lot of fun helping people in that space, as well as, using my technical skills to help people purchase their first property, car, second, third, etc. So it has been a great journey leading up to this point.
Yeah, awesome, man. Love it. Powerful journey. And I do love sports myself generally. I won't hold it against you that you're an Arsenal supporter, even though I'm a Man United supporter, but it's all good. We can always have a bit of a laugh, right, about that, being sports people. But you're doing better than us this season, so I can't really say too much. So we'll keep moving on from the sports and we'll get on to the property side, which I think is important, about people, buying their first home and investing in things, right, which is important. Especially in the property side with diversification. So when people are thinking about buying their first home, where should they begin?
Yeah, well, I guess it's sort of first doing your own research and speaking to the first point of contact would be a mortgage broker. Now, difference between a mortgage broker and a bank is pretty much a mortgage broker. What we do is we have accreditations and access to about 30 or 40 lenders, right? So we can assess a situation through a number of lenders and find which puzzle fits you. Whereas a bank has, one product that they sell and they offer, and unless you fit that bank's policy, you're not going to qualify for the bank's products. So I guess maybe the stigma sort of changed, but 70% of home loans are written by mortgage brokers. So traditionally people might have gone to the bank and talked to their banker, but now it's sort of starting to flip more the mortgage broker way. So the first point of contact is always speak to a mortgage broker, because again, if you're looking at properties in your neighborhood, they could be circa 200, 300 grand more than what your pre-approval is. So it gives you that sort of comfortability and flexibility when doing your research. You sort of know what's my capacity, what's my deposit, are there any benefits or grants that I get buying my first home, which you do, and then obviously after that, when can we look, or where can we look to buy our first property? So yeah, it does help having research, but speaking to the right professionals. If you're a PAYG, mortgage broker as well, but if you're self-employed, then an accountant obviously can help you with that too.
Yeah, awesome, man. Love it. Really, really powerful stuff. You mentioned grants there, and I think this is an important one now in Australia, where there's a lot more, help that the government's doing now to get people to buy their homes, because homes are getting more expensive. So do you want to share a little bit more about some grants that are available for people, so to make it easier for them to get their loan approved?
Yeah, so Australia and I'll speak in New South Wales in particular, because each state has different property price caps, but Australia and the New South Wales government have a few grants. In New South Wales, buy a property that you're going to live in. You can purchase a property with no stamp duty, which is a government tax to buy a property. It's free under $800,000. Traditionally, that was 600,000, but it has increased in this financial year. Whether that changes July 1st, not sure yet, but for now it's 800,000 stamp duty exempt. from 800,000 to a million, you get what's called a discounted stamp duty rate, so you don't pay the full stamp duty. And then $1 million and up in New South Wales, you pay the full stamp duty. So that's the first grant you get in New South Wales as a first home buyer. From the Australian government side of things, if you're earning under 125,000 as a single or under 200,000 as a couple, you qualify for what's called the first home guarantee, which means that you can spend up to a 5% deposit to purchase your first property without paying lender's mortgage insurance. Now, lender's mortgage insurance is an insurance that covers the bank in case you default on your home loan, and usually the threshold is 20% deposit. So it allows you to save about 20K worth of lender's mortgage insurance, getting with a 5% deposit, and the price cap for a property in New South Wales is 900,000. So that's only a $45,000 cost deposit, sorry, plus stamp duty to get in a property in New South Wales with 900K. So there's a couple more eligibility criteria, like being an Australian citizen. It's now open to permanent residents as well, not owning a property in the last 10 years. And you can also buy property with not just your spouse, but with family members, your uncle, sister, any sort of family members can also contribute. So that's sort of the main ones that we use. There's some other grants, Australian grants as well, which we won't delve into. There's a lower income tier called the First Home Buyer Assistance Scheme, which helps specialty workers. And there's also one for regional Australian First Home Grant as well. So there's a few out there, and people are taking advantage of it, which is good because as a first home buyer, you've got these tools available to you. We know how hard it is to save money to buy property in New South Wales and in particular Australia. So to take advantage of them as your first one is definitely beneficial if you can.
Yeah, awesome, man. Thanks for sharing that. It's very powerful now to help us to be able to purchase every little bit counts in here to get it over the line sooner. Now, let's just say someone comes, and you mentioned the example before about they get a pre-approval, but maybe it's a few $100,000 less, right, than what they wanted. But they really want this particular type of property, and it's going to cost them more. So then what can they do, right, from a budgeting, forecasting perspective or things like that, to change that? Obviously, it might be easier for a business owner, might just be earning more. For an employee, might be a little bit more difficult of how to do that. But how can we, I guess, if we want to go, okay, we want to buy $1 million property. All right, now we can only afford 700,000. How do we get to, that $1 million there? What can we do to then, be able to then go, okay, I'm ready, Vangeli, now to make this happen?
Yeah, well, I guess the first aspect is setting a goal, so setting a plan. And what we like to do is we say, okay, well, you can't get to that $1 million now, but this is the projected income that you need to earn, projected savings, work towards a budget to get there. So I guess there's a whole heap of apps out there for budgeting. So budgeting your daily expenses, cutting out any bits and pieces, unnecessary expenses that you don't use. Not saying to change your whole lifestyle for it, but at that point, that meeting, we know we have a plan to set. We can achieve that goal as well later on. That would be probably the first step I always recommend. But the second one also is expectations. Knowing that your first home might not be your forever home, which is sort of maybe it's sort of, I'm 28, so maybe it's our generation that sort of wants it all now and wants to buy the property now. And understandably, if you're getting married, you want to plan ahead for kids and all that to maybe move into a house rather than an apartment. But at the end of the day, property values do rise generally speaking. So really it's a matter of, well, if we can't get to this $1 million now, what if we bought something that was 500, 600 grand that we could get our foot in the door now? And then when we're ready to move into a house or when we're ready to go for that step, potentially we may have earned more money. We might have had some growth in the property that we can use equity to purchase another property with, or we can sell that property and use the extra funds from that to cash in on something else. So I think it's just expectations. That's the biggest one. And it's more a case of, well, if we want to get to $1 million, if it's not today, can we do it in 5 years? If we can do it in 5 years, should we get ourselves in the door now? And as we've seen, especially with rising interest rates, property prices haven't dropped. I think they just haven't dropped nationally speaking. So, I mean, it is a good investment. It's a good asset. But again, that expectation is pretty much what I think holds people back and then maybe sort of have some regret down the line. But if you can manage your expectations and know that the first home's not sometimes the forever, then I think people sort of get the outcome that they wish, because everything changes over time.
Yeah, nice, man. Definitely, there is important, especially in the city market where prices are a lot for housing, whereas apartments can definitely be more affordable for people depending on where you want to live, of course. So you talked a bit about obviously mortgage brokering and the financial element, especially about what you do. Let's talk a bit about, I guess, the next stage, right? Is the other people in the process here, to make sure that you're getting it over the line. And you probably obviously work with these people. So I'm talking like real estate agents or buyers agents and other professionals, I guess. So do you want to talk a little bit about how the role of everyone works, to get people to be able to then, get it over the line?
Yeah, great question, Athan. Well, being in the finance space, you're sort of working with everyone. Everyone has different roles that to help each other. So I guess for us, when you come to us for pre-approval, if you wish to have someone look at properties for you and go to open homes and do the sourcing, that can be very time consuming. And, that's where buyer's agent would come into play to help you source properties, but also negotiate for you and save that time. Real estate agents, of course, work for the vendor, but they're still a great source to lean on, because at the end of the day, they need to sell a property. You want to buy a property. If you're making friends with agents in the area, when something comes up, they know you're keen. They know they can reach out to you. So they're not necessarily a referral partner for the client, for yourself. You can use them to your advantage if you make, those connections. In particular, we do work a lot with the solicitor. So after the pre-approval, we always will recommend a solicitor to make sure that you look at the contract before you make any offers. This is crucially important when buying a property, especially at auction, where there's no cooling off period, which is basically to safeguard you buying a property in New South Wales for 5 or 10 business days. In case there's anything wrong with the property, like the valuation falls short, pest and building report doesn't come back well. Of course, the contract doesn't favor you. There's sort of certain things that you need to safeguard all that risk when buying a property. So getting a good solicitor is very key, and we have a panel of them that we can refer to, but all mortgage brokers will have a solicitor, and of course speak to a few solicitors beforehand, because those contract reviews are important. So yeah, so basically a team that you need is, you got your buyer's agent, real estate agent, your mortgage broker, solicitor, that usually does the job. And then after settlement, when you're looking at, your property expenses, you sort of have your property manager if you want to rent it out later on. They're really crucial in the process to get you a good tenant as well, to stay in the longevity of the property. And then, of course, your accountant to help you with all your taxes. So I always say, and why I put it in my branding, is we are a teammate, but with finance and property, I'm sure you've been involved yourself. You need a number of members on the team to help you buy that first property, or second or third. So crucial to speak to a whole bunch of these professionals, because they know what they're doing, and they're always willing to help you for that outcome.
Yeah, definitely. Love it, mate. We definitely need a lot of people in the team to build it up, and you can't just have one superstar. Everyone's going to be working together. And I think it's important for everyone, just a little, on my side, will understand about maybe not your side, but around the accountant, because a lot of accountants look for tax minimization. However, that can be a problem, right, when trying to get a property, because you actually want to not necessarily pay the least amount of tax. You might want to be paying yourself more to an extent, because that can affect how, like, I'm talking as a business owner now, right, about how you're paying yourself and minimizing tax on how you can lend, right, and how much you can lend. Do you want to talk a little bit about that element and what changes need to watch out for with those discussions with the accountant as well?
Yeah, well, I mean, I guess with that component, you always have the goal in mind. If your goal is to build wealth in property, then you need to have high income, because income is what determines your capacity. And so if your accountant's in line with that and the mortgage broker's in line with that, everything sort of flows into place. With lending policy, it has opened up a lot more for self-employed applicants for the last, since COVID time, I would say 3 years ago, where there's a lot more policies that favor now self-employed people to help them on their journey. So that could involve policies where you pay yourself a salary. You can use that salary entirely for your capacity. You can buy a property with 12 months ABN, given you got a 20% deposit, as opposed to 24 months, what it used to be. A lot of banks have self-employed products that can help business owners, sort of get into the market quicker through getting in with shorter ABN timeframes. So previously it used to be 24 months. Now some lenders have up to 18 months or 12 months. So that increases the time you can actually get into the property market a lot sooner. Of course, as well, like there's a whole heap of products that if you do have a good year in, this financial year, we haven't finished the financial year yet, but there's other lending methods that can help utilize some income in this financial year to get into the property market sooner if you wanted to, and then use a normal bank or normal self-employed policy later on. So I guess that when it comes to the accountant, always being in touch with your accountant or mortgage broker. Again, you have to have a high income for high capacity. You got to pay. That means you have to pay tax. You have to pay higher tax. It's just one of those. It's one of those trade-offs, right? You can't pay no tax and have a high income. And have all these property. It just doesn't work. It has to be a fine balance, and that's where having a good accountant that knows that, have a good mortgage broker that understands that, you can sort of work between the two and get that desired outcome.
Yeah, awesome, man. Love it. Thanks for sharing more. Just talk a little bit more about the pre-approval, because I think it's important here because it doesn't necessarily last forever as well. So what should people need to know so that I guess there is a time frame of taking action and moving things as as quickly as possible as well.
Yeah, so pre-approvals generally last 90 days. So from the process, the moment you step or you call a broker, basically you have the initial inquiry, and then from that we'll send you a privacy form to obtain your information. Now, it could be as quick as 2 weeks or as long as a month on the pre-approval getting lodged and approved, depending on how fast the customer gets back all the documents and how fast we provide, how fast we ask for the documents and do your servicing before the bank. So we ask for a lot of documentation because the banks ask for it, and we check all ends. It's not just your pay slips, it's your pay slips, your bank statements, your personal details, residential details, employment details, everything. So can be a tedious process from the customer side of things, but we ask for it because we know the bank needs it for the application. Pretty much once you're pre-approved, again, 90 days until it expires. Now, touch wood, hopefully that the interest rates do sort of ease up a bit, but generally speaking, that doesn't mean that you are fully approved. It just means that the bank is confident that you haven't approved for that amount, and further assessment will be done once you put the deposit down for a property. So if interest rates go down, then your capacity improves, but if interest rates increase, then your capacity decreases. So that's when we're seeing a lot last year where every month interest rates were increasing. People's pre-approval didn't necessarily hold at that amount because if interest rates go up, your capacity dropped down. So I think hopefully this year will ease up a bit. But yeah, about 90 days to find a property. And if you don't find one, you can extend the pre-approval for another 90 days. Usually most banks are like that. So yeah, pretty much it gives you that confidence over 3 months. And if you wish, you go back again, you do another assessment, and then you go again for another 3 months. And it's just a continuing cycle until you find something.
Yeah, nice, man. Awesome. And let's talk about the benefits, I guess, of buying the first home compared to renting, because a lot of people rent, and obviously we can buy a home as well. So what do you think of some of the benefits of buying your first home as well?
Yeah, well, I think buying your first home, you have an asset to your name. Generally speaking, it's sort of where people just, by having that asset, you're projecting your growth to increase. And when property growth increases, you build equity, and from the equity you can use that to buy more properties, or you can use it to improve your value of your home. That is a good benefit of owning a home. But in contrast to that actual question, is what we're seeing, especially for people probably in Sydney, is that rent investing is starting to sort of take off a little bit now, where people rent where they want in Sydney, and then they'll purchase a property interstate for a much lower price point, potentially more of a property. So, for example, you could buy probably for the same amount of apartment in inner West Sydney, you could buy a house interstate. So you'd use the rental income from that to obviously pay the bills of the property and add to your passive income, or add to your income here, and then you just rent as you would here. So that's been a popular strategy. I know a lot of buyers agents do sort of push that strategy, especially people in living in Sydney, because our state, our city is the most expensive in the country. So that's another option too. But again, when buying your first home, you just have access to the benefits that can get you in a lot sooner. And then, if you get in a lot sooner, trajectory, you're going to make more growth in the property depending on the area you buy, what you buy, and how long you hold it for. So yeah, there's some benefits to renting it and buying a home.
Yeah, cool, man. Thanks for sharing that. I think it's good for people, I think, at the early stage to understand this and at least ask the right questions, not only to yourself as the finance mortgage broker, but as the other players on the team, right? That we've been discussing here today, like the accountants and everything else to set themselves up. Because I tell this a lot to my clients is you got to think many moves ahead, like a chess player when you're doing business, but it's the same thing with this, right? With anything that you do. And the more you can think ahead and go, okay, well, because as you would know, once you buy something, an asset, trying to change that later, there's capital gains, there's other things that happen, right? So, make sure that you're thinking ahead with that about what you're doing. So, more of an accounting thing, but good, I think it's important for people to understand. So, awesome stuff, man. I think there's a lot of powerful things here for people to get involved with their first home. And let's talk a bit about business now. I know that you've recently started your own business after, there's a variety of roles and working things, all that experience that you've gotten. And it's challenging, right? Starting a business. Like I remember when I did mine, like it was almost 7 years ago now, right? When I started my first business, multiple companies now. It's been an interesting journey. Do you want to talk about the start part of this journey and maybe some of the challenges, that you encountered as well?
Yeah, it's been, I think the first challenge, it's been a fun process. Don't get me wrong, I've enjoyed sort of going out my own and trying to build a brand from scratch, or my brand in particular. And you're sort of trying everything. I think you can speak to many people in the industry, ask them for their advice, see their advice on, Facebook or YouTube or whatever it is, but you won't know if it works for you until you do it. So that's been sort of the fun part, has been just trying a whole different things, learning from experienced and successful mortgage brokers and taking some of their learnings of what they did and trying to implement it in my own way. So I guess the first initial period is always just getting the brand out there. It's been, you sort of just push yourself. I think that's been the biggest change, has been, pushing yourself for networking events, doing expos, social media, seeing people, talking to people. So just everything in that process. I think when you're starting out, you're sort of trying to get your first customers. That's sort of what you do. You just do everything. And when one sticks, then you sort of push it from there. I'm sure there was something that was working for you and wasn't working. And then once it worked, you sort of just double down on it. Is that sort of how you went about it too?
Yeah, man. Definitely. I agree with that. It's one of my, previous mentors told me at the start, it's like a shotgun approach initially, right? Where you go in and you're sort of shooting bullets in a few different areas and seeing what sort of sticks. And then all of a sudden the market speaks, right? And then you go, oh, bang, this is working now. I'm getting leads or clients, or I'm gaining momentum, or I'm gaining cash flow here. There's a lot of, different things, right, that happen in there. And then you start to go, okay, I need to focus more energy here, because every business is a little bit different. We all have different skills. Our mindset is different. There's a lot of factors, right, that go into business. And I can teach the same strategy to 10 people and get 10 different results. And a lot of the times it's because of their mindset and it's how they implement. But I love the work ethic that you were talking about sort of the pushing yourself. And, it's a very different mentality, right? When it's your own thing and you've got to sort of build the momentum. I think business is a momentum game. And at the start, when you've got no momentum, you need to create the momentum. And then, things start to then happen from there, right? I mentioned cash flow there. And I think this is important just to talk about with people, because other people are like, oh yeah, I'll start my business and then I'll just be earning all this money straight away. And it's not like that, right? A lot of the time, unless you're extremely lucky, right? Of getting consistent income. So do you want to talk a little bit about, the importance of cash flow, when starting your business and maybe having a surplus, money there, and then building that up, to get some of that money so that you're not in a bad position?
Yeah, of course. So basically, to break it down, I would say the way mortgage brokers get paid, pretty much from we don't get most mortgage brokers don't charge a fee. Well, I don't charge a fee at the moment. So basically, what happens is from the pre-approval, if you that could take up to a month, right? And say someone buys a property in 3 months, then it will take another 2 months for settlement to happen. So we get paid 1 month after settlement. So in that time period, someone buys a property, you've got 1 month of getting the application, for example, 3 months of the pre-approval, that's 4, 2 months of settlement, 6 months. So we actually don't get paid until 7 months of the year, right? So the cash flow delay for mortgage brokers in particular is it's a lot more of a time period than what it would be for, let's just say, a graphic designer who charges for a deposit before they do the work, right? So again, for us, it's the cash flow is so important because you're sort of having, you're going to get the cash flow eventually, but you sort of have to either have a surplus when you're starting out and using that to put all your marketing costs in, or trying to work outside of your 9 to 5 hours or weekend work to try and get the cash flow in. But once the first deals trickle on and come into play, then it sort of eases itself up. So I think the hardest thing with cash flow when you have a business, it might not but just be a mortgage broker, it might be another business where you're not getting the money until later. It's sort of having to prepare, okay, how much am I spending each month on the business, but how much can I live off before I can generate an income? And if you can work that out before you go on your own, I think that makes the process a little less stressful, because it is stressful, but it's less stressful knowing you've got 6 months under your belt or 9 months or 12 months. But that's sort of the main idea is look at how long you've got left in terms of your cash flow and then work out, okay, when the money is coming in, when you can start to put that into your business and your personal life and then sort of balance it all out. But definitely, without getting the money up front first, it definitely makes it a little bit challenging.
Yeah, definitely, man. I think that example there is a big time gap, right? Of 7 months, and it's probably one of the worst that I would hear. Hopefully, you get it within a month or 2 or 3, right?
Yeah, of course. Yeah.
On the business model, but it shows that it's even more important, from a budgeting perspective. And I agree. I did a bit of Uber for the first couple of months. I'll say when I started my business, because I literally quit my job and started my business the next day, which is very risky. Didn't do any of this stuff. I had to learn the hard way. But I made it happen, right? So, I don't recommend that to anybody. Do what Vangeli's talking about before you go over the line and understand your financial position. And do you have to do any other things, like you said, on weekends or other things like that, while the cash flow is building, because you're not just going to get a consistent income at the start, but eventually you will, as you build it up, everything there. So, yeah, I think they're really, really important points, for people at the start of their business journey or thinking about starting their business journey as well. Yeah, man, it's been a powerful episode today. How you shared a lot of great gold. And I guess as we're starting to wrap up, what one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
One piece of advice I'd say is just you won't know till you try. You never know if it's going to work out or not. You can plan as much as you can. I think I was planning to go on my own for like 6 months before I did it. But it's one of those things where you just got to do it and see how you go. That would probably be my best advice. If your risk tolerance is there, you can take the risk and you want to do it, go for it. And you never know, looking back on it 5 months, I'm still relatively new. I feel like I'm in it for like a year. It feels that long, but it's only been 5 months. So I like to ease the brakes up and say, okay, I'm actually still fresh in this. But yeah, it's been a great journey. I haven't looked back. I've been happy doing it. And that's part of the fun. Uncertainty is part of the fun. You've got to embrace it, enjoy it, and if you look back on it and you don't regret it, then you've made a good decision. So yeah, for anyone out there who's contemplating it, plan it, and then just do it.
Yeah, love it, mate. Completely agree with that. And yeah, I think one of the biggest regrets of the dying is living with regret, right? And you don't want to think about, I should have started that business, whatever, and be later on, and then you don't do it, for whatever reason. So if you're thinking about it, plan it like Vangeli's saying, and then execute, right, and make it happen. from there, and then at least you know if it's for you or not. Then hopefully you can make it a success and keep building on the momentum, from the start and everything like that, as well as obviously then looking at diversifying assets. This is why we talk about property as well on the Business Growth Show, and looking at investing in things like property, right? Your first home, and then if you want to continue from there, which is important as well on the wealth journey. So yeah, man, it's been a very powerful episode today. We connected through our networks, and you've had an awesome journey from various roles in sports to being a mortgage broker, and now being the director and financial broker of VK Financial. You're an awesome guy, very knowledgeable. I'm sure you continue to help people with their first purchase of their first home, investment, car, or asset, for their business. Very grateful we connected, and look forward to working with you. So Vangeli, how can people find you, get in contact with you?
Yeah, appreciate the kind words, Ethan. It's been a pleasure to get to know you as well through our networking. And look, people can find me. I'm all active on social media, so pretty much follow my Instagram. It's vkfinancial.au or Vangeli Kollias. Heaps of content every single week on buying your first home and all that other jazz. So I'm available there. Our website is vkfinancial.com.au. Pretty much, go to the Instagram. It's got all my details there, my phone number, my email, as well as my other socials like TikTok and Facebook. So yeah, that's where I'm at.
Yeah, awesome. So everyone, check out Vangeli and all those different social platforms, his website, and reach out if you're looking at buying your first home here in Australia. And it's been a pleasure to interview Vangeli, and thanks for being on my show.
Thank you, Ethan. Appreciate it.
Thank you, everyone, for watching and listening to this show where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Ethan Cassiotis, or visit my website, ethancassiotis.com. If you want to grow and scale your business, you can reach out to me on any platform to see if we're a good fit. I completely agree with you, or do I? The only way you know is if you tune in next time. So until next time, remember that our business grows when we learn skills and take action using them in spite of fear. So remember to design your growth and results.